The final thing we can do with CVP analysis is make a little bit of an income statement. Now we haven't actually covered income statements yet in too much detail, so we'll just make it nice and simple now. But the good thing about it is we can present the info that we've done. And let's use Mike Bikes again as an example. We've got the following costs. He knows that these metal frames, the tires and the gears, these are per bike. So we've got 100, 40 and 160. They are what we call variable costs of 300. It's also got the rent, the utilities and the wages, which are fixed each month, and they come to 6,000. He wants to sell each unit for $800, and he's got a desired profit of $2,000. So what we know now is that during the month, say, Mike was able to sell 18 units. What we can do is turn all this info into a nice little report which summarizes what happened, called the income statement. So to do that, we're going to start with the sales revenue. So he said he sold 18 units. Each unit sells for 800. That's a total of 14,400. What we do now is we want to get to how much profit does he make for each sale. So to do that, we're going to take away what we call our variable costs. Our variable costs were 18 units. Each unit had a variable cost of 300. 18 times 300 is 5,400. That will give us what we call our contribution margin. The textbook sometimes calls it the variable profit. We don't really use that word or that term, but we'll just put it there just in case we see it. So the contribution margin or the variable profit is 14,400 less 5,400, that's 9,000. Then we take away the fixed costs. We're going to list those separately. We've got the rent, we've got the utilities, we've got the wages, and we total them up for 6,000. And then we can see we've got a contribution margin or a variable profit of 9,000 less the fixed cost of 6,000. That is going to actually end up with a net profit or loss of $3,000. We put the brackets here for loss, just in case we ever do have a loss, we'll put it in brackets. But in this case, we can actually see it's going to be a positive figure of 3,000. So we would say that Mike would make a net profit of $3,000, and that is represented in what we call an income statement.